Just some comments from Brian Moynihan, the chairman and CEO, talking about responsible growth, how they were able to grow and refurbish branches and offices, more digital capabilities, all while keeping expenses flat. Ken, that kind of points to some of the things that you were looking at, particularly with investment banking being strong. Looks like they're stealing market share from others.
And they probably did great in debt underwriting, but in equity underwriting, including IPOs, probably did much better than Goldman. Okay. So that's a plus.
Is there anything you see here that makes you think potentially you would upgrade the stock?
We would not.
What would you have to see?
And one of the factors here is that they're very efficient. So their efficiency ratio is about 57%. There isn't much delta to get more improvement there. They're doing smart things to improve the business. But when you look at the outlook for banks, it's very difficult when you got 45, 50% of your net revenue and net interest income.
So you just don't like the banks overall because of what the Federal Reserve and other central banks are doing?
I just think it's, strategists will look at this as financials as cyclicals, but when you're cyclicals, and as Joe has mentioned in the past, regulated businesses, and you got the flattening yield curve, it's really tough at this point in the cycle.
Right now, the street likes it. It's up by about 1.4%. And Mike, you mentioned it's on the gains of 2% yesterday.
It's funny when you said what would impress you. And my thought was kind of controlling what they can control. And that's literally in Brian Moynihan's quote today, that they're focusing on what's controllable. But a lot that's not controllable is the interest rate backdrop, the growth situation around the world. And I think the premise is they still look cheap, right? Book value is like $27 a share after this quarter, so it's 1.1 times book. If we're back in a market that's going to start to try and get more cyclical and reward companies geared this way, you have this massive buyback that's underway, and they're going to continue to buy back a ton of stock. It's not that exciting, but it sort of supports the stock where it is. And as I said, this is the fifth run to $30 a share in the last 2 years. Right. See if it can crack it once.
Wolf, what do you think?
Yeah, I was just going to come back and say it now feels like J.P. Morgan was an outlier to the upside and Goldman Sachs the outlier to the downside in terms of year-over-year revenue growth. JPM plus 8%, Goldman Sachs down 6%. But Citi, Wells Fargo, Bank of America, three giants in this space, all flat essentially revenue year over year. And that highlights Mike's point. There's not a huge amount going on for the sector as a whole, but the stocks are cheap. They're buying back stock, and so they can continue to pull some levers. The question is how many more quarters can they pull those levers and that be enough of a driver for the stock price without top-line growth as well.
All right, great. Wilf, thank you. Just kind of wrapping things up with what we've seen on this. Mike, what else do we need to watch today with earnings? We've got the financials largely in at this point.
Yeah, it still is mostly financial. Believe it or not, the thing to watch is the overseas markets, which have started to act a lot better. If you look at European banks, they're working. So that's maybe a change in tone. And obviously, we're going to look ahead to Netflix because I think that's a massive. It's a singular company, but it's also a big sentiment tell in terms of how those numbers are received.
And Ken, I'll just ask you finally, too, in terms of what you think, having seen all these banks that have reported at this point, what's your takeaway? Do you have?
Well, the first thing, there's a relief. We haven't had in 15 years 4 banks reported in one day. That's over. We still have a buy recommendation on J.P. Morgan, and we downgraded Goldman Sachs yesterday from a buy to a hold. These great strategic long-term plans, we're not going to see profitability from those areas for a long time.